Welcome to The Explainer. Okay, today we are unpacking a massive, literally undeniable paradox in the April 2026 single-family housing data for Belknap County. It is this bizarre tug of war between buyers and sellers right now, and it completely upends what we'd normally expect from a spring market. So let's just dive right into the numbers to see what's actually happening on the ground. All right, let's start right here. $575,000. That is the newly minted median sales price for a single-family home in Belknap County as of April 2026. Now, to put that into perspective for a second, exactly 1 year prior, that number sat at $505,000. That's a massive 13.9% year-over-year jump. If you already own a home in the county, you are probably absolutely thrilled seeing that kind of equity growth on paper. But as you'll see as we move through this data, that hefty price tag is really only one piece of a much larger and honestly kind of strange market puzzle. And here is where the immediate tension reveals itself. You know, you'd normally expect double-digit price growth to be the result of a white-hot market, right? Like properties trading hands at lightning speed. But actually, closed sales dropped by almost 10%. We went from 52 closed sales last April down to just 47. So we have fewer homes crossing the finish line, yet the ones that do manage to close are selling for drastically more money. It's kind of like an exclusive nightclub with a line wrapped completely around the block, but only a handful of VIPs are actually making it through the door. Now, what's really interesting here is what's pulling the overall market volume upward, completely defying that slowdown in actual transactions. It's the initial asking prices. The median list price absolutely skyrocketed by 17.3%. Sellers went from listing their homes at roughly $550,000 last year to an incredibly ambitious $645,000 this April. And because these starting price tags have gotten so much larger from the jump, the total volume of closed sales, meaning the actual dollar amount changing hands across the entire county, shot up past $40.8 million. That is a 16.4% increase in total market volume generated by a fundamentally smaller pool of actual buyers. So this brings us to the core mystery of our explainer today, the inventory shift. Why exactly are sales slowing down while prices just continue to soar? Normally, basic economics tells us that if prices are rising this fast, demand must be massively outstripping supply. But to really wrap our heads around this specific disconnect, we have to look past the closing table and examine what happens while these properties are just waiting for a buyer. Well, the first half of this underlying shift is honestly a bit of a shock to the system. The time it takes to actually sell a home has doubled. Literally doubled. We are looking at a 103% increase in days on market. Back in April 2025, homes were moving at a brisk 30-day pace. Fast forward to today, and that timeline has stretched all the way out to a sluggish 61 days. Homes are sitting. And buyers are clearly taking their time, maybe balking a bit at those higher list prices we were just looking at. And why exactly are buyers taking their sweet time? Because suddenly, they have choices. The actual inventory of homes for sale has ballooned by over 43%. We went from a relatively tight market of 168 available properties last year to a much heavier 241 homes sitting actively on the market this April. That is a massive influx of options for prospective buyers browsing the local listings right now. They just don't feel the need to jump on the very first house they see anymore. Let's break down exactly what makes up this new landscape. We had 157 new listings enter the market in April, which is nearly a 19% increase from the previous year. And because of this fresh wave of new inventory, the month's supply metric, which basically tells us how long it would realistically take to sell every single home currently on the market, has climbed almost 30%, moving from 2.7 up to 3.5 months. Now, there is a silver lining for sellers here. Pending sales are actually up by 54.5%, jumping from 55 to 85. So buyers are out there, they are making offers, and contracts are absolutely being signed. But that growing 3.5-month supply fundamentally changes the game. It completely dilutes that severe urgency and bidding war mentality that buyers were feeling just 12 months ago. And this brilliantly illustrates the situation. If you follow the rolling 12-month trends, you can easily see how Belknap County's real estate market has been on a wild ride compared to the much steadier baseline of the entire state of New Hampshire. Belknap has clearly experienced much more aggressive, volatile swings. And right now, that swing is pointing straight upward to historically high price valuations, even as the local inventory we just discussed begins to visibly pile up around it. So what does this all mean? What happens when these incredibly high financial expectations from sellers collide head-on with buyers who finally have more options, more inventory, and a lot more time to decide? It brings the cold hard data right back to human reality. The ultimate question for anyone looking to enter this market right now, whether you are a seller hoping to cash in on your home's recent equity or a buyer trying to negotiate a fair purchase, is simply this: are sellers actually getting their asking price? Who really holds the negotiating power in this rapidly shifting landscape? To answer that, we have to look closely at the percent of original list price received. And I want to slow down here for a second because this is absolutely crucial. It's probably the most important takeaway of this entire explainer. Despite asking prices being dramatically higher this year, sellers are actually accepting a lower percentage of that original list price at the closing table. In April 2025, sellers were getting nearly 98% of their initial asking price. Today, that has dropped 2.2% down to 95.7%. This unequivocally proves that while the price tags on the front end have gotten much bigger, the buyers on the back end are negotiating much, much harder. They are leveraging that growing 241 home inventory and those 61 days on market to chip away at those ambitious initial list prices. It is a classic real estate standoff. Sellers are listing high, firmly anchored by the massive equity gains they've seen over the past few years. Buyers, on the other hand, are facing more choices and watching homes sit on the market longer, so they're pushing back and demanding larger discounts off those initial list prices before they even think about signing a contract. Which leaves us with this fascinating thought. With local inventory surging by over 40%, but median sales prices still holding at record highs, who is going to blink first this summer? Will sellers be forced to make steeper price cuts, or will buyers just capitulate to this new normal of $500,000 price tags? Thanks so much for joining me for this explainer. Keep an eye on these numbers. The standoff over the next few months is going to be absolutely fascinating to watch.